Internal Revenue Service IRS tax news. IRS issues standard mileage rates for 2022. But first, an attempt at a joke. I apologize in advance. The government trying to figure out what's wrong with the economy is like a not particularly bright man trying to determine why his entire body hurts. He pokes his hip, it hurts. He pokes his head, it hurts. He pokes his foot, it hurts. Finally, the people had to show the not-so-bright fellow, the government, at least 1,010,000 times, that his finger's broken. Stop poking things. You're not helping. Just leave it alone. The best you can do is empower the body analogous to the states here and let them heal themselves in the best way possible, which only they have the information to determine. IR 2021-251, December 17, 2021, Washington. The Internal Revenue Service today issued the 2022 optional standard mileage rates used to calculate the deductible costs of operating an automobile for business, charitable, medical, or moving purposes. Beginning on January 1st, 2022, the standard mileage rate for the use of a car, also vans, pickups, or panel trucks, will be 58.5 cents per mile driven for business use, up 2.5 cents from the rate for 2021. 18 cents per mile driven for medical or moving purposes for qualified active duty members of the armed forces, up 2 cents from the rate for 2021, and 14 cents per mile driven in service of charitable organizations. The rate is set by statute and remains unchanged from 2021. The standard mileage rate for the business use is based on an annual study of the fixed and variable costs of operating an automobile. The rate for medical and moving purposes is based on the variable costs. It is important to note that under the Tax Cuts and Jobs Act, taxpayers cannot claim a miscellaneous itemized deduction for unreimbursed employee travel expenses. So if you're a W-2 employee, it's less likely you're going to get, a benefit from using the mileage rate. It would be more likely that you would use it if you had your own business, something like a Schedule C type of business. So taxpayers also cannot claim a deduction for moving expenses unless they are members of the armed forces on active duty, moving under orders to a permanent change of station. So you might recall prior to this point in time, there was this moving expense if it was for jobs and whatnot, and that has been restricted to be basically almost eliminated, but still in place for certain aspects of the armed forces. So for more details, see moving expenses for members of the armed forces. There's a link to that here. Taxpayers always have the option of calculating the actual costs of using their vehicle rather than using the standard mileage rate. So if you have like a Schedule C type of business or something like that, then the mileage rate is thought to be easier because you could just track the miles and then use the mileage rate, which would be an easier type of calculation. However, you could use the actual method, and you might see which would be better, the actual method or using the standard rate. However, there is some restrictions with regards to the consistency because the IRS is a little bit concerned with the advanced depreciation. This is my interpretation that you might be able to get if you use the actual method. People would try to basically use the actual method possibly in year one and then switch over to the mileage method in later points, having basically taken a large piece of depreciation of the car, for example, or the vehicle, and then in later years switch back over, and that would be a little bit of an abusive kind of move. So the IRS, if you do choose the actual method, then you're going to have to be consistent with that. If you have the mileage method, then you might be able to go back and forth a little bit. So you got to be careful with regards to how much consistency you need once you pick a method. In other words, so taxpayers can use the standard mileage rate, but must opt to use it in the first year the car is available for business use. Then in later years, they can choose either the standard mileage rate or actual expenses. Leased vehicles must use the standard mileage rate method for the entire lease period, including renewals, if the standard mileage rate is chosen. Notice 22-03, there's a link to that here, contains the optional 2022 standard mileage rates, as well as the maximum amount cost used to calculate the allowance under a fixed and variable rate, the FAVR plan. In addition, the notice provides maximum fair market value of employer-provided automobiles first made available to employees for personal use in calendar year 2022, for which employers may use the fleet average valuation rule or the vehicle cents per mile valuation rule. So there's links to some of that information here There'll be a link to this in the description.